Joining me right here in the studio is Grace Ezema. She is a chartered accountant and, does financial services management, but she's the lead consultant for Wealth Eye Limited. Good morning, Grace.
Good morning, Amaka. Thanks for having me.
Yes, thanks for joining us. Now, I can see that you were nodding your head in most of the things that the great barrister was saying. So what do you have to say before we get into your own part of the conversation?
So I think I completely agree with what he said about the suspension for the implementation, because as it sees, it feels like there are different information. And I think one of the things we cannot afford at this time is misinformation of the Nigerian people, because that would actually become a stumbling block to seamless implementation of the new tax laws. So I would say if the legislative and the National Assembly, if they can all have their figure out and come to the same page on, okay, this is what the law has been passed, and that is what should go out in the Gazette, because once it's in the Gazette, it makes it binding to the Nigerian people.
Okay, so we have it there. Yeah, thank you. Now the House of Rep have actually asked for a suspension, and from the story played earlier, that was the committee being set up to look into these issues. Hopefully, we'll have an information. The 1st of January is just today's 19th, so that's just basically 11 or 12 days away, and when 1st of January, and this law is supposed to take effect from that time. But peradventure, the suspension doesn't come. Grace is here to help us understand how to go about the new tax laws. Who's concerned? How does it affect you? How do you do your taxes? How do you file taxes? How do you calculate your taxes? What bracket do you fall under? Those things is what Grace is here for. So I'm going to go over to you. We're going to start off with the personal income tax.
Okay.
How does that work?
Okay, so the personal income tax is literally the tax for individual and, let's say, sole proprietors, people who own like businesses. So now the personal income tax, there are two ways to filing the personal income tax. So if you're an individual and you're working for an organization, your employer is mandated to deduct your personal income tax at the point of paying you, let's say, your salary, and and all of that is subject to the computation table which the government has outlined for us. So I mean, I'll come back to the table, but let me just fall through. So that's one. So there's that assessment which your own employer does for you and remits to the government on your behalf before the 10th of every month.
So there's a particular time it has to be remitted?
Oh, yes. So you can't just say, okay, I can file my tax at any point. There's a date, so you must file your personal income tax before the 10th of the next following month.
Okay, so now how do you said something now for those in structured employment organizations, they probably wouldn't know or bother about calculating, but they should know how to calculate. But now for those who you say are sole proprietors of businesses, this equally affects them. How would they calculate this tax and go about filing it? Okay,
so that brings me to the second component of personal income tax, which is self-assessment. So as the self-assessment has to do with especially people who are not under structured employment, they're running their personal business. So in Nigeria, a lot of people just run their businesses and they don't see the need to structure payments to themselves as the business owners.
Okay.
Yes. So now, and that is where, because personal income tax is for individual, so not for like business.
Okay.
So individuals running business. So your self-assessment. So what this new tax law will mandate business owners going forward is the ability to determine what income comes to you as
the owner
of the business. So it's not, no longer, it's more like, and it's, for me, I feel it's also an advantage to the business owner because it now helps you put certain structures in your business. So you're not just, dipping hands into pockets of your, profits coming off your business. And if you dip hand into profits coming off, the tax man would assume that's your personal income. So if you can structure the way you're being paid, you should be able to pay yourself. And based on what you pay yourself, that is what you do your self-assessment on using the
personal
computation thing.
Let's get to the computation. Can you, because I've heard it's at different levels. I know the law says 800,000 naira. Anybody who earns less than 800,000 naira is not going to be taxed. So how does that, for people who now earn like $1 million naira and above, or in a year, what does that mean?
Okay, so now I just want to correct something. So when they say 800,000, it's 800,000 worth of taxable income.
Okay, what do you mean by 800,000 worth of taxable income?
Okay, so let's say for instance now, people whose annual gross is about 1 million, 1.1, 1.2, after deducting, let's say, their pension, their contribution, their NHF contribution, their NHIS contribution, their taxable, what is liable to tax is now what is left after all of these deductions have been made. Okay.
So when you make all these deductions and you have 800,000 naira.
Exactly.
Would you still get taxed on that money?
No, because it falls within the threshold of 0%.
Okay, so now, someone has $1 million naira.
Okay.
And you say your pension in a year, give or take, is about 100,000 just, and then your NHF comes to about.
I mean, you can't assume their specific
I know
yes.
that. So it's about 20,000 naira, and maybe your NHIS you're paying about 40,000 naira. So give or take, that's 160,000, and what you're left with is 840,000. So you're telling me for someone whose annual returns in a year, they're shaving off 960K, and the taxable income becomes 40,000.
Sorry, I didn't get that.
Okay, I'll go back again. Okay. $1 million naira.
Yeah.
Right? Your pension annually is 100,000. That's out, deducted. Your NHF is 20,000 annually, deducted. Your NHIS is 40,000 naira, deducted. What's left is 840. Total of deductibles now is 160.
160.
What's left is 840,000.
840,000.
What's taxable on 840,000?
So what's taxable on 840,000? It's now dependent on the next percentage after 0%. You know, there are different percentages up to 25%, depending on what income level you're on. But so from 0 to 800,000 taxable income are not liable to tax payments.
Okay. Okay, so after these deductibles, out of that 840, from that 0 to 800 will not be taxed?
Yes, so it's from the 40.
Okay, okay. Okay, so this now applies to both people who run a business and pay themselves.
Exactly.
So if I run the business, now, one of the issues that have come up here is talking about, I'm going to just delve into company income tax, because that's one other thing again, and you brought about small businesses and sole proprietor businesses. These people will now seemingly fall under personal income tax because their companies are not limited liability companies. Is that correct?
Yes.
So they would now have to file their taxes as a personal income tax.
Okay, so now we need to be able to separate the business owners from the business.
Okay.
So, but I think what we're doing as Nigerians is we're treating both the business and the business owner as a single entity when they are separate entities.
Okay. Now, you talked about the computation. Can you break that down for us?
Okay, so now for personal income tax, right? There are tax reliefs which the government has granted for personal income tax earners, starting from your pension contribution of 8%, which we all know. Then for your health, NHIS, that's National Health Insurance, 5%, NHF 2.5%. Now they've added in these new tax laws, they've extended like some other, tax reliefs, starting from the 20% rents of rents. That's maximum of 500,000, of course.
Okay.
If anything exceeding 500,000, it has to be. It can't, be considered. Okay. And then also, if you have life assurance, that is also, it grants you some level of tax relief.
Okay.
And also, there's also the voluntary pension contribution. So normally an individual's contribution is 8%, but under this new tax reform, you can, increase your own voluntary, contribution up to 15%.
That's okay. So normally required by law is 18%, 10% from the employer, 8% from you.
Yeah.
So you're saying now that if I wanted to, I could take my 8 to 15%.
Oh yes.
And I'll get relief from my taxation.
Yes.
Okay.
And also life insurance, and also let's say for instance you have a mortgage which you're paying interest on for personal property, not company property.
Okay. Okay.
Yes. So that also grants you some level of tax relief.
Okay. So you said something about the graduated sort of computation from 0 to 25%. So can you break it down using a certain amount on how that will be taxed annually?
Okay, so, sorry, coming in.
So let's say after all these deductibles has been taken, what's left as taxable income is the million naira. How will that be calculated?
Okay, how that will be calculated is now, so it's actually a long computation, and there's actually, like a tax calculator, which usually the tax bodies, make available, for individuals. You can get them on their platforms so that automatically if you impute all of the figures required from your gross income to all of the contributions you have to make and some of those tax relief, it automatically self-calculates. I'm sure if I start giving like all of that,
the numbers without pictures to show, that would be,
people might not really get the hang of it. Okay,
so you've heard that in case you want to try to calculate your taxes by yourself, especially for those of you who own businesses and not in a structured organization, and maybe you want to know just how your tax is calculated, try and get that on the platforms, the calculator, and the computation, and see how that works. Now we've done personal income. I believe we've covered that to a certain extent.
Yeah, just before we close out on the personal income, it's also important that people know that at the start of a new year, you as an individual, you're supposed to complete something called a self-assessment for annual returns on your personal income tax. So whether it's for people who are under structured employment, your employer can file that for you. So for companies, you're supposed to do that before the 31st of January for all of your staff. But if for
personal
individuals, so that you have up till March 31st. To actually file your annual returns and then get your tax clearance. Okay, so
at times when we see a lot of stories and movies, we hear things like tax returns. What does tax returns mean, and does it apply under this new tax law for Nigerians?
I'm not sure. I know where you're heading, but I'm not sure. Yeah.
Okay, you're not sure. Okay, that we have that for us.
No, we don't. I'm not sure. That provision has been made for under the new tax law.
Okay. Now, still on personal income, is there, apart from these deductibles, because I'm going to call these deductibles away from tax exemptions, is there any other tax exemption in any way that a person could actually, benefit from? And knowing Nigerians, they'll always try to find a way. So,
what I've listed so far is what is obtainable in the new tax law. So if you try to go outside of those listed tax relief that the government has given to individuals to reduce their tax burden, that would be you trying to evade tax.
Okay, yes. That will put you in the bad books of the tax man. Now, we don't only deal with individuals here. We have people who have businesses, whether micro, small, medium, large. How do let's come to company income tax. From the new tax law, they said it's 100 million. For small business. They've expanded it from 50 to 100 million for small businesses with an asset that is not more than 250 million.
Yeah.
Now, explain this whole CIT, because there's so much. A lot of people who own businesses and companies would think, I'm going to be able to, we don't know that because they're not registered, they don't fall into that category. Can you help us understand better?
Okay, so under the company income tax, what the government has done is provide some level of crucial for, especially for startups, because I'm sure the government is really concerned about, startups who are, coming up in recent times. So that is why the government gave the rule which says that for any company whose turnover is not above 100 million, they are not liable to pay company income tax.
Let's wait. Turnover or profit?
Turnover.
What's the difference?
So turnover is the total income that your company gets in a year.
Okay.
That's, you haven't done any deductions on it. So turnover is, let's say for instance, I run a company and in a year, let's say I got sales order in over like 150 million. So I have not deducted all of my expenses. No. So as long as I made turnover, like sales of over 150 million, it means my turnover is over 100.
Okay, so what? So, okay.
Yeah, go ahead.
So what you're being taxed is on your turnover, not your profit for company income tax?
No.
Okay.
So now, let me make you understand. So if your turnover is over 100, what you're paying, the 30% company income tax you pay would be on your assessable profits.
Okay.
Do you understand?
You're going to break it down for us so that we'll understand. So when you say accessible profit, what does that mean? That's after deductions have been made?
Yes. So after you've made all your expenses, of course, businesses have operating costs. So after you've done deducting all your operating costs, you arrive at, interest on that you pay on load, and all of those things are, after you've deducted all of that, you now determine your taxable income.
Okay. Now,
sorry, accessible profits for companies.
Accessible profits for companies.
Yes.
So, understanding you correctly, what is taxable is turnover over 100 million for small businesses, correct? Mm-hmm. And that is when small companies rather. Mm-hmm. When you're done doing all that, doing all the what's the word I want to use, deductions of your expenses and all that, interest you're paying on loan and all that, what's now considered your accessible profit is what will now be taxed on.
Yes.
Now, for people who are under this company income taxes for limited liability companies, I believe.
Mm-hmm. For limited liability and people who own businesses too.
So both small business owners with business names who are not registered limited liability companies can fall under this platform as well?
Yes, because you have to conduct like your audits for the year and to determine, know what your profit is. We have something called the income statement where you determine, okay, this is what my, there's gross profit, then there's net profit.
Okay, but information being there is that small business owners or business people who have their business registered as business names would end up falling
under personal
income tax.
So I think earlier I talked about the fact that Nigerians see their businesses and the person operating the business as one entity. Meanwhile, you're two. You're not the same.
Okay.
You as an individual, you're separate. You're a separate entity from your business. Does that make sense?
Yes. Okay. So now let's come to something else that I see another thing flying there, and people keep on saying now you have to be very particular about the descriptions of money being transferred to you.
Yes.
And all that. What does that mean? Because I wouldn't want someone dashing me money and I'm hearing being taxed on it. So what does that actually?
One of the things that are tax exempt are gifts.
Okay.
Yes. So if someone, let's say for instance, an uncle abroad sends you money, let's say, just
you can send me money.
Don't worry, we would see in camera. But if you get like gifts from, let's say, relative, or you are the one giving, it's very important that you properly describe the reason why you're sent for that transaction, because because one of the things the taxmen work with when they come to do their own tax assessments, because they also do their own tax. So it's better you do your own assessment before the taxman comes for you. So what they usually would work with is your bank statements. So in your bank statement, descriptions is what helps them determine, okay, this is an allowable expense, this is tax, yes. So,
okay, so now this has brought me to something that I feel is quite worrisome, but maybe not so much. Maybe I'm just, are you saying for people who are in structured employment, regardless of what the employer takes from you as tax, other incomes that come into your account is liable to taxation from the taxman?
So the thing is, where is the income coming from, and why is the money coming into your account?
So even if I have, okay, so businesses, okay, back to small businesses and filing your taxes, okay, so...
Because people who are under structured employment, there are people who still have structured employment, but they still have other sources of income. Mm-hmm. So it's important that even under your structure, because you've paid, tax under your structured employment doesn't automatically mean that has covered for your other sources of income.
Okay, so for people who maybe have certain gigs, they do maybe go do one or two things by the side, and it's not maybe all the time.
So so all of those things they all run on contracts. So what you can now be pay on those things are things like withholding tax. Let's say, for instance, I offer a service to you. You as the person who is contracting me to render that service, or you're allowed to deduct a certain percentage of withholding tax from the services I'm rendering to you, and then you remit to the government, to either the NRS, which is Nigerian Revenue, or the SBIRS, which is the State's Board Inland Revenue, on my behalf, depending on what services I render to you.
All right, so I have seen that withholding tax, and somehow it's being made clear. Now, there's some other information from this tax law that has come out that certain taxes will now be not happening anymore. Tax on food and all that. What's the implication of that?
So so the government has sort of exempted like tax from a number of sectors, from the food sector, the education sector, that I'm aware of as well. And so this is supposed to, in one way or the other, reduce let's say what people spend on
cost of living.
But as we all know how the pricing system is in Nigeria, that is why we have like the Consumer Protection Board to enforce some of, because the new tax law is not in itself to function alone, and it's not just the function of the NRS, which is the Nigerian Revenue Services. They are supposed to be working hand in hand with other agencies in government to ensure that we are doing our best to ensure that these tax reforms leads to a reduction in the cost of living. But the Nigerian Consumer Protection Board, so they are now like, okay, the government has done this, so automatically there should be some regulations regulating different sectors of the economy regarding like pricing and all of that, even for education services and some agricultural like businesses. I mean, for agribusiness, they are even, if you're a new agribusiness, you have tax holiday up to 5 years before. Yes, so it's as much as people are screaming on the tax, I mean, widening the tax net is good in the long term for sustaining the revenue generation for the Nigerian government, because this would also help like budget planning in the coming years, and not just limit us to the
oil revenues and all that. Our time is fast spent, and it's been actually a pleasure having you come to explain these things further for us. Now, she has said quite a lot of things, and for those of you who are doing your personal business by the side, and still working in a structured environment, you need to understand that you are to file your taxes. If I understand you correctly, both individuals and companies should pay their taxes before the 10th of the next month.
So individuals before the 10th, that's for personal
Income tax. Okay.
So for withholding tax and VAT before 21st
Okay.
of the month. And just to also let people know that, so if you're an individual who, after your personal income tax from your employer, you have like other things you do, and let's say you're being charged withholding tax that is remitted, even in your self-assessment at the start of the year, you are also to declare all of those withholding tax that was made on your behalf. So that's why it's important. Whoever says they are, deducting withholding tax from you should actually
give you evidence that
it's been done, because it would also be factored in your personal self-assessment.
Okay, there you have it. So personal income tax should be paid before the 10th of the next month, and of course for companies 21st of the next month. It's been quite very what's the word I want to use, insightful sitting with you this morning and gaining this knowledge. I hope our viewers have been able to gain more and understand more of how this new tax law will work come the 1st of January. Peradventure it's not suspended by the government due to the discrepancies that have come up on the floor of the Green Chamber. That's it for Business Daily this day. For more of our news, programs and documentaries, you want to follow us on social media platforms and on our YouTube live stream. I've been your host this morning, Chiamaka Mwafo.